I think we can say that one of the major areas where SaaS products make a difference is in the fintech industry. While on one hand, innovation is appreciated for all domains, data integrity and security becomes an area of prime concern for the finance and banking verticals.
To understand how this industry can gain from and implement technology of the future in finance, I would like to call upon on the stage Mr. Neelkant Rawal, Managing Director, Wells Fargo, Mr. Nabarun Saha, Senior Technology Architect, Infosys, Mr. Sameek Roychoudhuri, SVP Head of Global Risk Analytics at HSBC, Mr. Subho Samanta, Chief Delivery Officer, Exavalu. Also, it's a power-packed session today with back-to-back tracks. We want to keep the flow as crisp as possible, hence requesting you to restrict your questions to 5 minutes for each panel to all the guests over there. Rest you can take it offline.
Thank you, Naskam, for arranging this very, very interesting session. I know half an hour is very less for the topic we have, but we'll try and restrict ourselves to the time you've given us. Actually. Thank you very much. And thanks to everyone who's attending today. Very good afternoon. We have a great panel here with a varied experience, and I'll try to moderate the discussion in such a way that we get to use the half an hour we've been given to the maximum extent. So just a quick one. Neelkant is from Wells Fargo. We have Nabarun from Infosys, and we have Sameek from HSBC. We'll be talking about data integrity and the innovation, how this has evolved and what it is going to be in the future. So all of us are aware that the banking system has changed drastically in the last few years. It has moved from completely paper-based to automated right now, and the center to all this is data. Most of it is managed by what the banks get, the data they get. And the trustworthiness of this data is what determines how effective it is. Now today, if you look at any of the financial institutions, they use this data to make their decisions on creditworthiness of companies, creditworthiness of individuals. They want to do risk analysis based on this data. So the trustworthiness of this data is very, very important. So, what is data integrity? Data integrity is based on the completeness of the data, how effective or how compliant it is with the regulations. That is very, very important. And these are some of the aspects we'll try and address in the discussions today. So my first question to Neelkant, since you are from the financial industry directly, there's huge amount of data being generated in the world today. So how are the different financial institutions using this data to make it most effective for their customers and consumers? So I'll request you to talk about that.
Thank you, and it's a pleasure to be here. First up, statutory disclosure, so I don't represent my employer. I'm speaking on my own personal behalf, so thank you for that. When I first came across this question, I was tempted by, and reminded by Jay. He made this wonderful statement that we're surrounded by data, but start for insights. And that's what kind of triggered me onto this journey. If I was to look at this question, I'll just break it down into 3 parts: the historical context, the current, and the future. So if I was to let's look at the context side. Now, like you said, banking has traditionally been on paper. Now, if you go back to 1960s, that's when ATMs were first introduced, actually. In 1973 is when the SWIFT was able to make the first cross-border transfer. So about 6 decades long is the journey for a banking industry. And when you look at that, then the data exhaust of that is pretty significant, right? And because it's such a large, I often call it, in my own way, as big data. It's both structured and unstructured. Now, let me just look at some of the current context in terms of how data has been triggering innovation. The 5 elements I'll talk about. The first one is around, let's say, servicing. Servicing is probably the most easily used and most widely accepted one. Everyone's heard of chatbots, everyone heard of sentiment analysis on the social media, being used across the borders, across the world in terms of both loyalty measurement as well as any kind of insight or stuff. You also have things like down detector coming in, which are helping the banks in terms of reaching out to the customer so that they can access when they're out in an outage. Let me then go into the second one, which is a little bit more of core to banking, credit. If I was to take the example of US, the household debt for credit, as far as US is concerned, is around $17 trillion. The GDP of India is 4, right? So that's about 4 times the size. If you take just the home loans, that's about 12 trillion. Auto is about 1.6 trillion. Cards is like 1 trillion. So student loans is about 1.6. So if you look at it, these numbers are really, really staggering. Now, this is coming on the back of the fact that the US customers, in terms of total population, is about 1/4 of India. So when you put all of that together, you just come to a conclusion that, wow, loans are really popular in the US, right? And taking that a step further, so what are the banks doing essentially just to deal with it? There are a few things that they're doing. One is as simple as creating dashboards as to nudge people to do the right thing, manage their personal finance. Then they go a step further. They use predictive analysis. And predictive analytics is used as to predict when a gig worker is most likely not going to be able to service that debt. Okay? And hence go out and offer them payment assistance plan based on that. All of these are completely based on data that is available and triggers. If you take it to the third one, which is cybersecurity, there's barely a conversation that happens now without cybersecurity. In India, we've seen that about estimated $20 billion are lost by Indians due to cyber crime or whatever. And one of the things which we have got to call out is the fact that we live in a rough neighborhood, and warfare is not always kinetic. So if you look at it from that perspective, what essentially comes together is the fact that, an example I can quote is from Ukraine, that prior to the Ukraine war, there was a massive cyber attack on the entire financial services of Ukraine. The idea was to completely wipe it out, and if that, then Ukraine would have never had the wares and means as to fight back. Okay? If you go further beyond that, then, and I know Sameek will probably be able to do more justice on this, but things around model risks, right? Everything that's financial and non-financial gets baked into it. It helps banks and financial institutions organize themselves and move forward in that. The last thing which I will also touch upon is, we are in the heart, we are the capital as far as payments are concerned. And in India, UPI has been significantly huge. I think in October, we did something close to $11 billion transactions, and close to 260 billion, which is about 5% of the GDP. Interestingly, I don't see the banks in India doing much about it. So while you've seen statements grow, you're not seeing banks leveraging that data so as to do that. Okay. Spending a couple of minutes in terms of where I see the future, there are 3 vectors of change that I see it. The first one is around the customer, the second one is around the geopolitics, and the third is around technology, and you guys are all from a technology part. If you look at customer, then we are right in the middle of the massive wealth transfer. An estimated $70 trillion of wealth is with the boomers, which is anybody born before 65, 70 trillion. And that's going to move to Gen X, Gen Y, and Gen Zs. Any one of you who have Gen Z's kids, grandchildren, knows that they're very, very different from you and I, right? And that brings you to the fundamental change that the moment they have the financial muscle, the world around them will start changing. The second thing that comes to mind is the fact that geopolitics is here to stay. We are increasingly living in this bipolar world, which might even become multi. And And as such, the economic gateways are going to start shifting. And that's going to have a lot of impact in terms of how we make investments. And finally, when I look at technology, we're about a year since ChatGPT was born, and the world has changed a bit. I'll put it that way. If you look at it from that perspective, we will see, three things. One is higher proliferation of AI in banks. The second thing we will see are, a heightened cyber issues around the world because of geopolitics. And the third thing that you can, put it all together is the fact that because the customers are going to change, you will start seeing things like custo bots, which are essentially chatbots made by customers who are able to have their own decisions. And that's something which will drastically change. So that's my opening statement. I'll hand it back to you on that.
Thank you, Neelkant. So that brings me to my next question to Sameek. Sameek, how is the advancement of modeling being impacted by data and its expectation by the regulators? We hear about AML, SOX, so many regulations. So I'd like to understand your point of view on that.
Sure. Firstly, thanks for having me here, both NASCOM panel and Mr. Samanta for this particular panel. You you talked about, trade decisionings and all of those. All of these use model. Now, when we talk about innovation, we often talk about novel concepts, business models, and technology. What is much less talked about are the linkages, which is one part is model, another part is data. Now, analytics model, I'm using it, I would be switching it across both the topics and both the terminologies just for the sake of this discussion today, although both are not same. But modeling or usage of models for commercial purpose in banks or financial services in general have been there for 30 years plus. So what has changed really? It has, not only the methodologies got advanced, yes, 20 years back, we used to have regression models, logistic regression, forecasting models for time series, etc. Now, with a wide array of methodologies opening up with machine learning and deep learning, Gen AI, LLM, transformers, all of those things, we have more options to solve different other kinds of problems. Whilst we are, of course, get excited to solve those, one additional thing which comes as a cost of managing the models is to ensure the data is of right quality. Now, I'll go back in history a bit. And as I said, organizations have been using, analytics and modeling 30 years back, perhaps. But till then, they were, capturing all the data in Excel sheet, lying in somebody's computer in some weird place in the organization, or in some other very different location. So it took ages to collate data and prepare the data for the modelers, which was a humongous task. Any modeling exercise used to have 60 to 70% of data collection and data cleansing time spent on than the core modeling. Now, if you think about how the modeling process has advanced, most of it has become, user interface based. You don't need to write codes for a logistic model or a machine learning model these days. It's in form of a GUI in front of some, software that's available with you, and in a particular platform called cloud. But what has changed massively is the way how we used to capture data and how we used to treat it. Till 2008, we were following some traditional ways of data warehouse and Excel sheets and a combination of those in general. 28, we had the Lehman Brothers event, right? And that really rattled the market. And that was a wake-up call for banks, particularly for risk parlance, because there was a wrong estimates and wrong management of how data was being used to predict certain business decisions. Now, having said that, was it only in certain quarantine in investment banking? No, retail banking had been using analytics, credit scoring for many years, but the issue actually popped up in the investment banking space because the complex derivatives and other products, which were backed by heavy financial engineering and hardcore coding, all of those models actually, had certain problems, in some ways or the other. So that wake-up call created an awareness in the market with the regulatory expectation that a new model, every firm should actually have a model risk management framework, which is more prevalent for banks and financial institutions rather than any other FMCG or other sectors. But that was the inception of having a formalized model risk management framework, which underpins various factors, which are very simple principles. When you are designing a model, is it for the right purpose? What problem are you going to solve? Can you justify that this methodology is for that purpose? And at the back end of the model, which is actually the upstream activity, is the data suitable or not? When we talk about, it started with data integrity and talked about certain qualities of it, authorities started questioning and institutions had to comply to prove the data is complete, accurate, it's being used for the right purpose. Now, why do I mention right purpose? I just give an example. All of us use different kinds of apps today, right? And we accept all the terms and conditions without looking at the fine prints. Now, expectations from different authorities, a particular data should be used for a particular purpose, predefined purpose, which the customer should be aware of. Now, although initially when we are signing up for it, we know what purpose we are going to solve, but we don't know, we don't have any control on how, if for any other purpose, the same data would be used, right? So there are certain open-ended areas which need certain attention. If you think about on the same topic from organization perspective, it's not possible to go back to the consumer and seek consent every now and then, correct? So there are workarounds which have been worked out or are still in progress, but the purpose of having the right data for the right purpose is very critical in this whole discussion. Now, I'll fast forward from that post-Lehman phase to slightly pre-COVID, when the technology boom also happened with the emergence of cloud. There were a lot of concerns around putting data, in-house bank data on the cloud, and primarily because of cross-border data transfer agreements, particularly for global organizations, or even for domestic organizations. It took some time to move there. People tried different kind of encryption, decryption methodologies. All of those things have been sorted out, and we are moving on in that direction. And the methodologies which got advanced also took advantage of the cloud technology, and we kept on moving. However, during COVID, or slightly before COVID, and definitely during COVID onwards, few new concepts of banking and financial services propped up more, and that's in the fintech space, with open banking, account aggregation, all those things coming in. Now, let's take up the example of credit decisioning once again, which both Neelkant and Mr. Shamathu was alluding to. And back home in India, if we have to lend to an SME, most of whom are unbanked, it's very difficult to get data. Forget about having in-house data to build models. We have to actually rely on some external and diverse external data from diverse sources. Example being, GST returns and all of those things, which can act as proxy to your P&L, the revenue lines, and other things. Now, whilst you can put a data governance framework for your organization, you can't ensure the similar governance framework is for the third-party aggregator who has actually collected data and supplying to you. So there are certain risks involved in it, because at the end of the day, we have to prove to other regulatory authorities that it has been collected properly, it has been stored properly, sorry, it's being used for the right purpose, and also it's being accessed by the right people to do the right thing, right? So a lot of intricacies involved in it. Now, I just gave one example, of account aggregation and stuff. People are moving ahead, but coming back to the original topic that we started with for this panel is balancing between innovation and the data integrity. I think as we move forward with any kinds of new concepts, algorithms, and methodologies, we have to be taking the costs of managing the models and data along with us. We have to accept it. Of course, there would be ROI trade-offs, right, for every business decision. So it depends on the business case and strongly, very, very much on the business case to ensure that it bakes in the costs of managing the models and the data inside. I haven't touched on technology. I believe my colleague Nabarun would cover here.
Thank you, Sameek. You know, you mentioned Lehman Brothers. I remember 2008, we won a large project for loan origination. And within a month, the Lehman Brothers event happened. And that project was cancelled. And they started another one on risk management. So, you know, very, very interesting.
So you're validating what I've said.
Yeah, absolutely. I still remember that actually, because we were unhappy that we lost a project, but then we realized we won another one on a different topic actually. But great, thank you. Thank you, Sameek. Nabarun, he brought in a great point that they have to rely on data from other sources. So my question, you know, today, if you look at it, you know, we have multiple cloud environment which has multiple channels, which is interacting with multiple channels and collecting data from multiple channels. And then a bank or an integrator collects data from these different channels and creates an intelligence out of it. So is the architecture, what are the innovations in that architecture so that these companies can create data which is complete and trustworthy? So are there some innovations in the architecture of these companies or these models actually?
Yes, to answer this question, I will be basically thinking from to highlight more on the evaluation of the data platform. So as Sameek said, right, we used to store the data very ancient age that we into a very Excel sheet, and then from there we move on. So there are the evaluation happened for this data platform. So from the first gen, we used to have an enterprise data warehousing where all the data are coming from different sources, mostly the structured data coming to the different sources and put it into a single repository. And from there, we begins on some of the analytics and also some fine-tuning of the data, refactoring of the data, refinement of the data. So those things are happened. But in that cases, there are some drawbacks because we used to have only the structured data. So how to handle the unstructured data? How to handle the different type of data? So that is the basically the driver for coming to that second gen of data platform, where we come up with the concept called data lake. Okay, so there what we are doing, we are basically gathering the data in the, whether it could be a structured data, it could be a unstructured data, semi-structured data from the different source and put it into a raw format into a single repository. So there, from that particular data lake, so whenever the data is coming from different sources, we do not have any extraction from there. So just the raw data in the binary format, we are getting it, ingesting it, and store it into a data lake in the raw format, that is binary format. And from there, we do some manipulation, extraction logic on top of it, and then we provide it to the consumer. It could be an analytics platform, it could be a report platform. So that is how we are moving ahead with the second gen of data platform. Now coming to that, what I can say, the drawback of the second gen platform would be if you are not maintaining those data in a proper manner, it could lead you a data swarm. And also handling those data or managing the scope of the data will be very rigorous process, and it will leads you, it requires more skill set to manage those data. So on that case, we come up with the next platform, that is third generation platform, data platform, where we come up with the new concept where we basically handle with the batch and stream processing. So how we are doing? So there are a lot of sources. So we are getting the data, ingesting the data from different sources. It could be a batch and also a live stream data. We are getting it from the different sources and then store into a data lake. And from there, we basically do some analytics, and we are providing those data to the consumers. Now, we are in the third generation data platform where we come up with the new concept, architectural concept called data mesh. So the data mesh is the new concept which we bring into. You also heard about the microservices architecture, right? So what it does, it basically break down the fat monolithic services or platform into a small services, chunk of services. So the similar concept, it is applicable for data mesh concept, where we basically distribute the data into a different data domain. So in the data domain, we are basically, when we are segregating the data, the entire data into a data domain, so data domain will be responsible for the specific type of domain data. And the responsibility to handle those data or maintain those data relies on our dedicated teams, not on the centralized part. So we are basically decentralize the data, and the governance will be also responsible for the dedicated teams. So now here also the concept of centralized and decentralized. I just spoke about the data mesh as a decentralized platform. We also come up with a centralized platform where we can have a centralized repository. It's a small, the bright example of this centralized data repository is data fabric. So data fabric, what we will do, we basically having all the data lakes, right? The data lakes, we are having the datas, but we have a single platform where we store all those datas, and we put a centralized governance on those data. So by that way, we can basically overcome those that different type of governance are there in the decentralized platform, but in case of data fabric, we can also leverage those centralized governance part over there in this data. So these are the new innovation. So nowadays, the trend we are seeing that we have to implement the data mesh, not the complete format. Instead, the people or the architects are very much trained to implement the data mesh in partial format. Why? Because we need to cut down the disadvantage of decentralized data governments. Rather, we should have a centralized data governance on top of it. So that is why the trends we are seeing, we basically looking forward to implement the data mesh partially. We can also have these things available for the Azure, GCP, and AWS platform as well. So that's what the trends we are looking to.
Great, thank you, Nabarun. So we have time for about 2 or 3 questions from the audience, but before we get there, I have a question for maybe Sameek or Neelkant, whoever. You know, with today, there are a lot of cross-border transactions which happen. And while this is happening, there are a lot of security situations also. So all governments are very, very cautious about these transactions. So what kind of security measures are taken or regulations are there for any of the AML situations which can happen due to these cross-border transactions, actually?
You want me to start and then I pass it to you?
Yeah, sure.
All right. Clearly the business first and then governance. So there are 2 parts to this question. So one is around at an infrastructure side, and the second one would be at the regulatory side. You know, I did touch upon the fact that you have the cyber threats, which is, and some of the times you must have come across SWIFT networks which are being hacked into and attempted to hack, and every day there is a multiple number of attacks that happen on it. So maintaining that layer is extremely crucial, if I should call it that. So that's one part of it. The second part is around the sanction screening or other kinds of screening which have been designated by different organizations around the world, whether it's US, Europe, India, and others, right? Now we do use specific software around it. There are different vendors who have been able to create a very robust database, and that is something which most of the banks have been accessing, is how I'll put it. Sameek, anything you want to add to it?
No, yeah, thanks, Neelkant. I think I'll just add a couple of things on this. So you talked about the regulatory aspects, right? Now, different countries have their own data policies, data framework. And with the AI regulation coming in EU, which is risk-based, with, US has come up with something, it's not very prescriptive. And India as well, we are seeing, AI program launched with a key pillar being data governance and how we manage the data. And these are upcoming thing which will try to address it. But historically, for global organizations, we had to comply to the law of the land. And we had to sign up for cross-border data sharing agreements on that front to build a global model which can be, used across entities, not only in India, but across Asia, say, for instance. Can these be, is there any innovation to the SWIFT example that you talked about, particularly in the wholesale space, the corporate, because SWIFTs are primarily around that, right, wired around it. I think the wholesale CBDC concept, the central bank digital currency, is the new thing which is being tested out across different organizations. And that could be a solution. We don't know. We have to just see.
Thank you. Thank you. Anybody from the audience has any questions?
The discussion. So a few things were discussed where I think Nabarun, you mentioned about the approach of having a data mesh as well as the data fabric model, right? And I have personally seen large migration programs like on-prem data warehouses migrated to cloud. So and they are really large, complex programs. So. And Sameek, you were also mentioning about different data domains. So if I consider the banking space, right, so obviously the customer domain, and then you would have in the capital market space, and the risk and compliance part. So in terms of your decision making about what's going to be in a data mesh and what are the things which would come under Fabric, from a business standpoint, are there any specific recommendations which you have? And I understand this is from a banking industry perspective.
Yeah, I would like to take this questions. So basically, as an architect, you have to understand what your organization's goal. So now, if I already mentioned that the data mesh is, every model is having the pros and cons in it, right? So the data mesh is also having pros and cons. So as I already highlighted that the data mesh is having one disadvantage, that you cannot control a centralized data governance policy on that data mesh architecture. So in order to have that particular policies and the centralized data governance policies, you have to go to a centralized architecture. So that is why the industry trends we are basically seeing, the organization with more focus on the centralized data governance will opt for the data the fabric concept. So why? Because in that data fabric we can leverage the datas, or we can have the data governance policies implied on the centralized platform. And but in that case, nowadays we very much see another concept called data ops. So basically, these data ops are having three pillars in it. One is agile. Second is basically the lean manufacturing and the DevOps. So what is DevOps? DevOps is continuous integration and continuous development. That is CI/CD. So we are having better time to market, right? So whatever we are developing in a very small chunk and very target oriented, and we just make it available for the market or user to use it. So that is what all three things we compromise in the data ops, where the DevOps, and agility, and also the lean manufacturing. The lean manufacturing tells us how that the refinement of that process are basically exist and deliver the data quickly to the market. So that is the new trends we are seeing right now.
Thank you. So it would be safe to assume that all the attributes which are related to risk and compliance, PII attributes, and all of that, we know about regulations like GDPR, all be inside a fabric.
Absolutely.
Yeah.
Absolutely.
Thank you.
Hello. Yeah. So rest of the questions I think we can take offline with the speakers, and I would want to thank the esteemed panel for having this wonderful session. So I would want to invite Professor Shotoji Chakraborty onto the stage to hand a small memento to each and every one of the speakers. Thank you, everyone.